welcome our speakers to the stage. David E. Rutter is the founder and CEO of R3, the firm behind Corda, and frankly, one of the global pioneers in enterprise-grade blockchain for financial services. This session will be expertly moderated from Emma Joyce. If you were with us here yesterday, she did a fantastic job moderating sessions for us as well. She's a senior managing director at the Global Blockchain Business Council with a major focus on institutional adoption and regulatory transformation. Please welcome our speakers to the stage.
Well, absolutely delighted and honoured to be here on stage with David, who I'm sure needs no introduction at all. R3 is one of the longest standing players in the enterprise DLT space. And today we're going to hear about how the landscape has evolved, what R3 is up to. It's a very exciting, pivotal year for many in this space. Why is there so much excitement around institutional adoption now, and what challenges exist, and how is R3 helping industry with these challenges? So I'm going to start by asking David to talk about, recently the Corda network celebrated its 10-year anniversary alongside the Ethereum network. So how has that digital assets landscape evolved over the last decade, and really what is driving that institutional adoption at the moment that we're seeing?
Okay, well, thank you. First off, thank you all for being here. Thank you, Emma. Glad to have a chance to speak here today. So it's interesting that our anniversary kind of coincides with Ethereum, and there's a bit of a story behind it. I think Ethereum is a little bit better known than the Corda network because it's in a public space, and that's an important direction of travel, which I'll talk about during the course of this. But for those that don't know R3, we have been around for a little over a decade. And when I founded the company, I was really inspired by Bitcoin and the beginnings of Ethereum. But I had spent 30 years in traditional finance. I'm a registered securities rep, a Series 7, 24, and 63. I've owned broker-dealers. I've run both fixed income and FX exchanges, so kind of my history was grounded in how TradFi worked, but we were super inspired by the tech, so we went out and built our own layer one, and it's called Corda, and then we subsequently built a network for our customers called Corda Network, and we very much from the start focused on how do we solve industry problems, what can this technology do to advance the industry. And everyone talks about tokenization now, but if we look back, it started with how can we improve the plumbing of TradFi, which, might sound boring, but it bloody works. And it's been around for, decades. And in some cases, I often reference the fact that the DTCC out of the US is still run on COBOL programming. So there was a real need there to address that. So we were really focused on that at the start. We made sure we stayed very clear of the regulatory line. I mean, the crypto world's still kind of the Wild West, but back then there were no rules, and it was like a really, really scary place. An email to Bank of America mentioning Bitcoin would be flagged by compliance, for example, So the world's changed, and we've had to evolve with it. But we had, midway through our 10-year cycle, we had considerable amount of success. We got things like the ABI system for the Italian banking system live. We've built out what is the only true digital exchange through SDX. We've done work with Euroclear. We've built systems that work for collateral management and the like. So importantly, they work at the production level, and we meet the criteria of the most discerning customers in the world, which are central banks, banks, and FMIs. However, we're not as cool as DeFi. We work within a lot of restrictions. And what's great is that most recently, as we drive towards regulatory clarity globally, but certainly take a big leap, kind of scary leap in the US, with the sudden acceptance of crypto and stablecoins, and the desire to lead the digital economy, we see a really unique opportunity to take what's on Corda now, which interestingly, if you look at a public ledger, they'll talk about the TVL. What's the total value on ledger? It's not even a metric that we even considered till 9 months ago, until I heard it was driving tons of value in the crypto and DeFi space. And we took a quick look at it. We have over 10 billion, probably closer to 20 billion in what they call TVL, real world assets, which puts us in a unique position. So excitingly, as we get more regulatory clarity, we're working with our customers. We're going to announce next week how we're going to integrate with a layer one and really become a public permissioned solutions provider for the asset side of our business. Now, we also have a central bank digital currency side of our business. We have a big project here. That will stay on a very contained private permission ledger for the time being.
Amazing. Wow. And exciting news for next week. Thank you for sharing that with us. Sticking with that first question just briefly, you mentioned crypto can still be a bit of Wild West, but we're approaching that sort of regulatory clarity. Will that then help, I guess, the convergence of traditional finance and digital assets?
Yeah, Emma, convergence is a great word. Until very recently, I couldn't see that in the immediate future, and now I do. It's not just what's going on in the U.S. Look, it started with MiCA, whether you like what Europe did or not. They got out there early and began to define a digital asset regime. This region and this country certainly has done that. That's very helpful. But as an American who lives in London and a very worldly American, there's some stuff going on that's got me a little shaken. But the lack of regulatory clarity and the default until very recently, which was, if you're a bank or you're a traditional player in the securities industry, be very cautious, beware, or don't do it at all, is changing. And that opens up a massive opportunity for R3 and, more importantly, for our customers. Now it begs the question, okay, if we open up the floodgates, and to be really clear, as someone that's been in TradFi for a very long time, we may open the floodgates, but the water's going to trickle to start, because it's one thing to say you can play in the space, but if you're a bank or a regulated financial institution, you still have to meet the requirements around AML, KYC, and the like. But there's some really unique solutions that are evolving in the DeFi space. And I have to tell you, most of my career has been spent introducing electronic trading innovations to fixed income securities, FX, and some money market products. But we had to do it within the pretty firm restraints of traditional finance regulation. Well, the DeFi guys and the crypto folks had none of that. They had none of those constraints. And they went out and they've invented some really, really cool stuff. Now, can it all overlay on TradFi currently? Of course not. But is it a direction of travel for us to consider? The way AI agents are being used to source liquidity in illiquid markets without giving up critical information about the underlying project and all, that stuff is very valuable. It will be adopted over time in TradFi. But most importantly, we look at our role as an entity who has grinded our teeth in this really difficult space, which is blockchain, but within the confines of TradFi regulation, but with an ever-growing understanding of the DeFi space. And guys, it's $3.5 trillion. So that's big, but it's not that big. Mm-hmm. Okay, it's really just a drop compared to what you can have on TradFi. So back to my point is that we think we're in a unique space to work with the big financial institutions to help them understand the opportunity that exists in DeFi, and importantly, get them there in a way that they can meet the regulatory requirements that they face. And we're super excited about it.
And you're in a perfect space at the moment, aren't you? Because, that we see so much of that. And you must see, I see it myself just in the talent moving from traditional finance into digital assets to regulators, and that sharing pool of talent must help, grow this even further.
So Emma, I'm kind of glad you said it. It's a sore spot for us because our three alumni are all over the crypto space because while we did unbelievably innovative things, and most importantly, our system works at scale, we didn't have a coin. And, you weren't getting rich quickly at R3. You were getting rich in your knowledge and your experience, and you were working with some really important and impressive customers. But, we had some big turnover, and I take these things very personally. I love the company. I love the people that work there. And, post-COVID and what they called the Great Resignation, I was about as depressed as I can get, and I'm a pretty optimistic person. And now, I'm feeling better about things than I have for a long time because it was like we're trapped. We're like, guys, we have this solution. It works for you. It solves your problems. And a lot of customers were like, yeah, but it's not Ethereum. It's not Solana. You're not as cool as those layer one applications. I'm like, yeah, cool is one thing, business is another. And now I see a path to bring them together in a manner that works for everyone. So I'm hoping a few of those couple hundred R3 alumni that are doing amazing things, make their way back to us.
Yeah, it sounds like I think you were too early. You just had an idea before everyone else got there, and now they've got there.
My career is defined as actually my life is defined as too early. I got married at 22, first time. So,
I love it.
Anyway.
So can you talk us through some of the use cases where digital assets are working in mainstream finance?
Yeah, so the most compelling in mainstream finance are really about collateral mobility. So folks that know trad finance, you end up over collateralized everywhere. If you have a global business, you have CSDs globally, you have money parked there, you have securities parked there, but your business is global and your business is fluid. So you might do a lot of business in Europe today and the U.S. tomorrow, and collateral flows are really difficult. Now, in the digital world of the future, and like I referenced SDX, which is the Swiss digital exchange. So if anyone wants to know what the future looks like, they're a good one to look at. And actually, the Swiss National Bank provides wholesale CBDC so that those securities can settle atomically on chain. And that's what we want. Once we get there, then the tokens hold the value. The tokens can fly around the world. They can move instantly. And that works for individuals that want to trade Bitcoin 1 minute and then buy tokenized gold. In this region, tokenized real estate's a really hot thing. So I envision this future where the digital wallet contains a lot of different assets. That works well for the folks in this audience, but also for TradFi to really be able to free the billions of dollars of collateral that a JP Morgan or a Goldman Sachs or an HSBC have sitting in CSDs around the world is very powerful. And we have one important solution that's started with R3 and a gentleman called Guido Stromler out of UBS. It's called HQLAX. And it's been around for about 8 years. A bunch of the banks all the big banks have bought into it. HSBC and BNY Mellon and JP Morgan and Barclays, all these folks have bought in, and it's about tokenization of collateral and collateral mobility. Now, there's a lot of other use cases as well. Really quickly, as we go digital, we also expand our hours of trade, and so you no longer close at night and open in the morning. So you need money and assets need to be able to move hours of the day and on weekends. So that's other opportunities as well. And that's what a lot of the bigger exchanges are focused on now.
Yeah, that's amazing, and will just benefit so many people, I think. What are the biggest challenges when you're looking at tokenizing RWA, in regulated financial markets?
So the tokenization process is not a big deal. We provide token engines. A lot of people can token stuff. It's not hard anymore, and it's understood. We've also done enough POCs and use cases that people know how all this stuff works. What's really difficult is that I talked about the plumbing of TradFi. It's been around for a long time. It's buried deep beneath the payments. And it might be old, might be rusty, but it works really, really well. So to disrupt that and to get the new world order to work within, that market until you can rip up the payment and remove it all, that transition is really hard. And we've talked about it for years, and there's no clear answer, but what has to drive it is the prize. So that DeFi prize, the instant mobility of collateral money, has to be so valuable, measured in hundreds of billions or maybe even more money over a defined period of time, that you're like, screw it, it's worth ripping up the pavement. And I believe we're getting there, which is really exciting.
I can feel that as well, but I wonder, is some of that challenge as well culture? So I work with lots of amazing digital assets teams within the banks who are all over, this, but sometimes maybe their bosses don't understand it. Is that changing, or do you see that changing in the future?
So FOMO is the best driver of this stuff. And really, it has to come from the bank C-suites.
Yeah.
And if you're at a bank, I said this the other day, it was actually point zero. There was a gentleman there from Standard Chartered. I don't know if you remember this or not. But I said, look, in 3 to 5 years, the worst job in the world might be being a bank CEO, because the number of attack vectors of new technologies and the mode of protection in the past has been, for good reason, by the way, the regulatory protections that you have. And remember, these institutions are too big to fail, and we don't want them to fail. We want them to survive and thrive. But they're really going to have to change. And I think that there's enough of these known threat situations that the C-suite is becoming increasingly aware. And I'll use one example. Brian Moynihan, who's the CEO of Bank of America, kind of surprised everyone talking in Basel about how, they see the banks involved in tokenized deposits. Well, of course they have to be. What does a bank want to do? The bank wants to hold your money to provide other services to you. What are some of the biggest profit drivers in banks? They have massive businesses, is their private wealth arms. They don't want their family offices and their rich families pulling their money out and moving the account over to Coinbase, because that's the only place you can access, digital assets. And it's not like family offices are out saying, look, I need 10, 15% of my portfolio exposed to Bitcoin. Of course they aren't. But if it's 0.5%, do the math. It's a very, very significant amount of money, and it's really important for those banks to hold on to those clients.
Yeah, absolutely. I totally agree. We've got a couple of minutes left. Would you please tell the audience what you're looking forward to, what's exciting coming up, please?
Well, I just saw the head of digital from Euroclear walk in, and he's a big customer, so I have to say I'm really excited to getting out to dinner with him in Paris soon. But all joking aside, what I'm excited about is a lot of the stuff I spoke to, which is kind of this new period, this new opportunity where there's more clarity about DeFi and the opportunities that exist there. And to be clear, we've done our homework. The DeFi folks right now, they want some diversified assets. And most importantly, especially if you're in a regime where you can't have stable coin yield, you want to be able to jump into something from your USDC to earn a yield. Well, Euroclear, SDX, HQLAX, all these big banks, they sit on trillions of dollars worth of yield-bearing instruments. The challenge for us as an industry, and we play a small part, as I mentioned, in helping our customers, move to that environment and understand the risks. And really, it's not as much about the technology anymore, because it's very well proven. But we hope to partner with them to help them move into that space in a way where the DeFi investors will benefit, but TradFi can kind of move on from these restrictive chains of the traditional regulatory regime and, build some new and interesting projects and products.
Absolutely. I have followed R3 for many years. I think you actually play a big part. in what has happened so far and what is going to come. I think, without that convergence that we spoke earlier, that is the future, surely. So thank you for all that you do at R3, and I think definitely a company to watch this year. Thank you so much for your time, David, and thank you for joining us.
Emma, we have 33 more seconds.
We do have, they've shut that down, so I think we're done now.
I'm just kidding. Hey, thank you all so much for coming, and listen for the announcement next week. And R3 is changing direction. We're going to make a big push into this space. So love coming to this region. We have a big presence here, an office in Abu Dhabi. Thank you very much. We look forward to working with all of you. And Emma, thank you.